Hello folks, it is 5:01, just underway. First event of the year. I hope you all had a great holiday season, a little time off. I enjoyed some time off, that was great. And hope you're all looking forward to a great new 2022, however you're handling it. This is the first event of the year. The last event from the end of last year, I did not put out in video form. I sent an email to everybody summarizing it because it was test your knowledge. And I kind of felt when I was, kind of reviewing the video that nobody watching it is really going to sit there and go through it by themselves, not in a group, and take the test. So I figured it'd be better to just put it out in email form and, if you want to kind of run through and take the test, but better it was that you could see the results very quickly. But I thought it was a very revealing thing. If you didn't get that, it was an email that was sent out. If you didn't get it, email us here and we'll get it back out to you. So I thought it was a great little exercise we went through. And actually I partly wanted to see the results of that because I said most of the test is not so much. There are only 3 questions, I think, out of 14 that were kind of really testing real technical skill. And I'm sure some of you maybe didn't even disagree with my answers, but the rest of them were not about, what was right or wrong in the chart. It was the fact that you were comparing 2 different charts. You didn't even realize it. And a lot of people gave very different answers to what ended up being the same chart, because it was flip-flopped or stretched or shrunk or whatever. So I think it's very important that if you're making your decisions about trades by looking at charts, that you understand what you're looking at. So I thought that was a very good event. We're going to start out this one with something not totally unique, but a little unique. It's called Quick Tips 7 by 7. There are 7 tips that have been sent out over, I started sending these probably 3 years ago, not since the very beginning. And what these are sometimes, I think they probably come from the trading room sometimes. I start to say something over and over and I say, that is just one of those mottos you have to really, it's a motto. It's almost a saying. It's something you really have to take to heart. As you know, I think that almost all the sayings that you hear when you start trading, except for 2, are completely worthless or wrong or backwards. There's only 2 sayings you hear in the beginning that actually have some truth, and most of the rest of them are said by amateurs and are not even really true. But these here are sayings, if you want to think of them that way. When I was getting prepared at the last minute, I threw an extra slide in here because I started to kind of think, well, how do people apply this? I mean, there's a wide variety of you listening to me. Some of you are students for a long time and you're doing great, and some of you are doing good on your own and you're here to just listen, and some of you are kind of new, or some of you kind of thinking about, being more of a trader than you are. How does it apply to you? So I came up with this slide. Quick tip 7 by 7. 7 events, 7 minutes on each. Art, real quick, 7 times 7 is 49. It leaves me 11 minutes of free time to talk. All right, keep an eye on that. So I'm going to take like 7 of that now and 4 at the end, okay? 7 minutes. So this is what was emailed to you. It kind of says what I'm saying right now. But this is a slide here. Tonight's about the DTS trading quick tips. So these were sent out by email over the last 3 years. And when I sent 2 of them out recently over the holidays or in December. And I got quite a few comments back on the second one. And I came to realize that probably all of these, they're just quick little hits. There's usually a line or 2 beneath this that explains it a little bit. But a lot of these are really some in-depth concepts. And I don't think people who just open their email and read it real quick really catch the full meaning. Or some people do and have questions. So I wanted to actually go into detail about each of these so you can understand how much is really behind these little one-phrase sayings, if that makes sense. And here's the slide that I came up with just kind of last minute, just a half hour ago. Where do these trading tips fit into a trader's education? Who will benefit from really understanding what these mean? I know it's maybe a little small, but I'm going to read it. I had to make it small to fit it on there. The spectrum of learning, in a sense, most of these webinars are kind of advanced. I really have never said that before until I just said it now. And here's the reason why. If you're new, these may be over your head to some extent. Now, it's like a lot of things. There's different levels you can grasp something at. I know everybody can read the slide and understand the meaning. I don't mean that. But for some of you that are really experienced, some of you emailed me that, boy, you really appreciated the comment, like you lived it, you understood it, you know what it means exactly. And a lot of traders who are reading these don't really understand them. I know you can read the words, I know you understand the English, but you may not necessarily really understand the full meaning. Here's the thing about all these webinars in general. First, you have to know what you're doing, know the charts. But after you know that, the first issue is likely that you don't know the charts well enough. This is the biggest thing I run into with people trying to learn, is that they tell me that, they understand charts and they're good with charts, and they're not. They're just terrible. No offense, but they're just terrible. They don't understand anything more than the basics. And as I've told you, if you know the basics really, really well, you will probably lose money at a very slow rate, which is not the goal for anybody. But even after you get to know the charts really well, you have to get to learn them at an excellent level, as it says. I think that's fairly easy to do. Now, I don't want to make light of it. It's not super easy to do, but I think relatively speaking, it's fairly easy to do. As I've always said, it really doesn't require the education beyond that of a fifth grader. It really doesn't. No offense, but I mean, it really doesn't. Most of the problems fall after that. Once there, it doesn't mean you make money. Math and psychology stop most. These webinars often revolve around these latter two concepts. Sure, some are all about charts. Some of the webinars I do are about charts and about prior trades and about tracking and all this good stuff. But there's not really any of that tonight. I could stick some in to show off, but they're really not to the point. They would distract. There's no reason not to put, I always say when I put charts in, I always take charts from the last couple, 3 days. I don't stretch back to find some, obscure thing. I'm over my goal for this week already on Wednesday. It's a great trading week. There's nothing wrong. It's just that charts tonight really are not going to add to the point of these. They're not really, you know what I mean, everybody? They're not really something where you go show an example on a chart. These are a little more on the theoretical side, these comments, okay? Make sense? Because if it does, I think we're ready to start with number 1. Oh, I just want to add a comment since I have another minute or two. Yeah, new year for everybody. I always say I'm kind of bored at what I do. Over the 4.5 years, I thought I'd be so busy, doing my trading and doing what I do and running a company. But I've always kind of said, yeah, I'm actually bored most of the day, because I usually am done trading at 10:30, 11 o'clock in the room. And running this company doesn't take much at all. But I was very busy the last 6 months. You guys know what I was busy with the last 6 months? I mean, some of you do. I just want to mention this really quick because it's all over finally. And well, I think I kept up on everything just fine. I felt a little bit under the gun, though, the last 6 months. Yeah, the home study. Yeah, that took a lot of time. I mean, I knew it was going to take a lot of time, but it took a lot of time. But on the good side, I could not be happier with it, and nor could the students. I haven't heard a negative thing. I've heard tons of compliments. And the original intent of the home study was to kind of give sort of an outline of the course, and when I was doing it, I changed around. And the home study is actually more in-depth than listening to one class live. I always say if you come to the live classes, because every class sometimes will go down different avenues or focus a little more or dive on a question, that if you listen to 4 classes live, you would probably get 130% of the information from any one class. It's just the way it is. And the home study probably gives 120% of any one class. It's really detailed. There's extra stuff to it, so I'm really happy that it's done. It finished up last year. I have no extra work problems or issues with it. It's all good to go. So for those of you who've been waiting for the home study, it's out there. It's done. It's part of the seminar program. And the question that comes up a lot is, I really thought about this. I don't think it matters if you want to sign up and listen to the home study first once and then go live, or the other way around. I really don't think it matters. I see advantages and disadvantages both ways. Almost kind of like listen to the home study first once and then go live, because then you'll be more confident to ask questions, I think. Thanks, Eric. Again, this is done, it's not a recording of classes. It's done on a professional corporate college type of learning module system, they call it, an LMS program. So it was a lot of work, but now it's done, it's all fun. So anyways, I want to get that out because it just took up a lot of my time, but now I can go back to being bored this year. Thank you, Dick. All right, 7, we're 11 minutes into it. DTS trading tip number 1. The tip is, anytime that you're in a position that eventually hits its target, any management you do costs you money, sometimes a lot. So this obviously focuses on the concept of management. It's a huge topic to me because one of the things that I have a lot of comments about management. Well, one of the ones I like to say very simply is that once you know the charts, eventually management is going to make or break you. That is what ends up making you successful or not successful. Traders that know the charts very well, even though that's a very worthy goal to achieve, are still kind of a dime a dozen. No offense, it's just that doesn't necessarily mean you put money in the bank. What gets money in the bank for you is proper management, knowing what to do when you're right, knowing what to do when you're wrong, and knowing how to constantly handle it. Notice the first comment off to the right here, and this was actually on the email. This is not to say that all management is bad. You could adopt the policy of no management. Oftentimes that is the best management. If you're the better the trader you are, see if this makes sense to you, yes or no. It may sound backwards to some of you. But the better of a trader that you are, the less you should be managing. Does that kind of make sense? I mean, if you think of it in the extreme, it'll help you visualize it. If every trade you took made a target, right, then this slide would apply to you, right? Anything you do costs you money, right? If you take a day trade and it runs $1 and you managed it in a way that you only took 60 cents because you're protecting profits, you lost money, right? It may have felt good because you protected a potential pullback or whatever you're trying to do, but you lost money. Where traders like to manage a lot is the traders that lose a lot. Why do traders who lose a lot like to manage a lot? In other words, if you're long, you raise stops real quickly and get taken out. Losing traders tend to manage a lot. And I'm not saying that they lose because they manage. I'm saying that a trader that has poor selections will try to manage a lot. Well, they manage a lot because it actually helps them because they lose slower. In other words, if you pick the other extreme, if you pick all losing trades, right? Anytime you reduce that from being a full loser, you helped yourself a little bit. But think about what you're doing. All you're doing is slowing up the process of losing. You're just bleeding slowly. You're never improving. So that's not good. So the important question to ask is, does your management make you money? So step one is you have to have trades that somehow eventually would make money theoretically, even in hindsight. If you can go back and look at the chart and say, hey, that trade eventually got to a worthy target, then the next question is, did you get to the target? And if not, why not? Right? That's the key. Unfortunately, most traders don't look at it that way. They're in a constant state of fear, and their focus is on minimizing losses. Here's a fill-in-the-blank question for you. If your focus is to constantly minimize losses, what will you end up with at the end of the month? A whole bunch of minimized losses. That's exactly right. That's what you end up with. And the shame of it is for a lot of people is they don't even know the answer to this question. In other words, they don't even know if they're managing properly or not. Here's the big question for you. If you look back, well, this is actually, I'm going to bleed into another slide with this comment, so I'll wait till we get there. Yeah. So management is key, and I think this is an amazing comment when you think about it, because most people don't think this way. And it is just what it says on the surface, is that if your trade got to its intended target, or if a day trade closed at the high of the day, anything you did cost you money. It's not always wrong to do that. I'm not saying it's wrong. I'm just saying that on that particular trade, anything you did cost you money. And it's something you have to constantly be evaluating and understanding. That's why there's no universal management system, because every trader takes different trades, takes different entries. It also has a different personality and style, which you have to adapt somewhat in your trading. It's like going on a diet, sort of. I mean, people go on diets in different ways, because not everybody can just, stop eating for 6 days and then have soda crackers on Sunday. Not everybody can do that. So there's different styles you have to do. If you adapt some kind of management style that you can't possibly follow because it's just not in your psyche to be able to let something pull back or whatever, you're never going to be successful. You have to have a style that works on the charts and works for you, because you can actually do it, right? So that was trading tip number one. I think, and again, this just scratches the surface of obviously a huge discussion. My whole second class at DTS is all around management concepts, managing entries, managing stops, managing how to get to a target. It's so important. It's kind of like 1/3 of the program. So this just scratches the surface of it. For those of you that are just kicking the tires here at DTS and living on the free stuff page, there are several free webinar events that deal with management. They have management in the title. Go back and look. Remember when you're on the free stuff page to also look at the archive page, because only the most recent events and play of the week videos are on the current homepage or on the current free stuff page. The archive page has the rest. They go back all the way to the beginning of DTS. So look for the titles that interest you, and obviously management was also the part of several other topics, even though it wasn't maybe mentioned in the topic. Let's go on to number 2 if there aren't any questions. Feel free, by the way, ask all the questions you want. That's exactly what we're doing this for. Here's trading tip number 2. Am I on schedule? Exactly on schedule. 11 plus 7 is 18. DTS trading tip number 2. It's not what you miss, it's what you make. If you have the constant fear of missing out, you will lower your odds. Strike when things line up, lay low when they don't. Time out. I want to go back to the last one for 1 second because let me ask you guys, I wanted to do something while I did this just for fun. Is there if you could give me one, just take your shot, give me, and this is your opinion, it's not a quiz, what would be the key word or two that you would use to summarize this first tip? A word, not a trading word, an emotional word, an adverb, an adjective. I just want to kind of keep a list of these for some reason. And again, I don't know the word. I'm just asking, what do you think? Well, yeah, I don't mean so much a technical thing. I mean, what does this require of a person to do this? In other words, skill, patience, rules. Okay, there you go. Rules, follow rules, discipline. Okay, I'm going to take the first 2. And actually what I'm going to do is I decided I was going to key phrases. All right, it's not what you miss, it's not what you make. There is a acronym that should come to mind right away when I say that phrase. It's not what you miss, it's what you make. What is that acronym? 4 letters, starts with an F. Yeah, FOMO, exactly. Fear of missing out. That's what this one addresses. And I think as you go on as a trader, you begin to appreciate how huge this one is, right? Some of you, a lot of you here have been around a while. I think it's something you don't appreciate early on, and then as you go on, here's some maybe possible symptoms if you have it. If you have a hard time at the end of the day, if you're a day trader, well, no, long term too. If you have a hard time deleting a symbol, in other words, you have a watch list going, bullish, bearish, and you just start accumulating symbols. But if you accumulate symbols all the time, anybody have that problem? Anybody have that problem where you're like a symbol hoarder? You're afraid to delete a symbol because maybe that'll be the trade tomorrow? Anybody have that problem? So you just keep building big watch lists and bigger and bigger and bigger and bigger, and they just keep growing. And it's not until a symbol becomes so completely blah that you finally get rid of it, right? Okay, that's a sign you have this problem a little bit. Fear of missing out. You know what? You're just supposed to track the best, most important stuff. You know what? The best way to understand this is to understand every day you're going to miss a zillion things. You're going to miss a zillion things. Long term, short term, you're going to miss stuff all over the place. You know, none of that matters. It doesn't cost you to miss. What you have to do is focus on what you want to do and not miss the ones you want to do. The only things I consider a miss are when you have a trade, it meets your requirements, and you're saying, I will not miss this. And then you hesitate, and then you chicken out, and then you start double thinking. That's a mistake. That's a miss. That's because you had an emotional response at the last second. That's a miss. But other than that, you never miss anything. There's always another trade around the corner, and you don't have to worry about it. Let's see what else the slide says. You have to be able to just walk away. You need to do that anytime things are not just right. As most of you know, there is actually even a video out there, a webinar called The Walkaway. That is my style of day trading. And everybody in the room knows this, right? I feel to me, the highest odds time for me is that opening 90 minutes or so. Now, I'm not saying that's the highest odds time in the market in general. There's some good rationale that says it is because it is the most volatile time. It's the most predictable time. You have the morning reversal times. All kinds of things say it is. But I don't really care. I don't have a problem. I don't teach people you have to be there the opening 90 minutes. I do teach people that you should only focus about 2 hours as a day trader, nothing more. Or maybe walk away and come back for an hour later. Don't sit there all day. Do not sit there all day. Watch the movie 21 if you don't know what I'm talking about. Every other chance of a lifetime comes like. Paul, I would say that's a great saying and well-timed for what we're talking about right now because it's very, very true. Like many other psychological problems, this one is perhaps more of a problem for the day trader. And that's because as a day trader, you're a little more emotional because you don't have that time. You know, as a longer-term trader, market closes or you come home from work, whatever you're doing, 5 o'clock, you have all night till the next day to think rationally. But as a day trader, you're caught up in the whirlwind and sometimes you don't think straight. The FOMO that keeps you glued to the screen is the same problem that is lowering your odds. Again, if you agree with me that for any trader, the way you trade your style, that there is a prime time to be sitting there, any time beyond that is lowering your odds. Does that make sense to you in some mathematical sense, in some logical sense? Does that make sense? And again, I invite you to watch my favorite movie for traders. It's called 21. You can get it on Netflix for free, I think, 21. It's a great movie, period, to watch, and it is the best movie for traders, period. And when you're done watching the movie, if you haven't heard me say this before, if you go to the website and go to the other stuff page, not free stuff, but next to it is the other stuff page, it discusses that movie and there's a 2-minute clip. And once you've seen the movie, don't watch the clip first, but once you've seen the movie, that 2-minute clip should be huge in helping you fix psychological problems. To me, it's just an amazing clip. Any of you agree with that? Any of you seen the movie and seen that clip I'm talking about, the one that's on the website? You watched it? I think when you can see that guy and say, you never want to be that guy, right? Never want to be that guy. That's what I'm talking about. You need to pick your stocks, pick your times, pick your timing, and demand your entry. If it lines up, you do not hesitate. If it doesn't, you walk away. The biggest thing as a day trader to me, as a long-term trader too, I don't know why I said as a day trader, is that at the time of entry, there's no decision to be made. You've already made your decision. Those of you in the room with me, I'm speaking 100% truth, correct? In the morning, that opening 10 minutes, I know exactly what I want to do. I tell you exactly what it is. If it doesn't happen the way I want it, I go on to something else, right? There's no decision. Now, when I say there's no decision, I mean, there is a minute decision. I mean, sometimes something, rallies and I want to short the rally, and where that exactly is, I'm looking just for these little signs, but I'm looking for the same signs. But whether or not it's going to happen at 25.25 or 25.35, I don't necessarily know ahead of time. There's a range, but I mean, I know exactly what I'm doing within that range. And I don't think a lot of traders do that. I think they just kind of come with a blank mind to the day, and they let the stocks boss them around. They kind of, like the stock's dragging you around by the nose, telling you what to do. No, you don't do that. You demand what the stock has to do, or you don't enter it. You decide if it is worth chasing a stock. I will chase a stock sometimes when I think it's worth it, right? If I think it's worth it, I'll chase a stock. I chased one yesterday at open. What was it? Not Roku, but I can see charts. I can never think of the symbols. Somebody will probably tell you. I chased one yesterday and it paid off. It was a good trade, and I chased one today. But I decided to chase it. By chasing, I mean, if it starts to drop or rally, I'm going to go after it. I'm not going to necessarily wait for the perfect setup because I think it's going to have a big move. But you have to decide all that ahead of time. And the biggest point of this slide is that I think there's some kind of a revelation at some point when you can just decide as a day trader to just get up and walk away, just in the middle of anything, just to say, hey, I don't care what's coming up next. I got the trades I want, I'm where I want to be, and you are happy with that, and you're not constantly afraid that that next symbol or the next chart is going to do something crazy that you love. It may or it may not. It doesn't matter. You have to focus on the money that you make, not the money that you could have made. Now, a little asterisk next to that, we're always about improving ourselves. And there is a difference between evaluating your trades, evaluating what you did at the end of the day or at the end of the week, end of the month, and seeing if there's room for improvement. That's a whole different topic. But that has nothing to do with just chasing what's on your screen all the time. Does that make sense? Piton is what I was thinking about yesterday, yeah. All right, good on this one? I think this is very psychological, and this is really not much to do with the charts per se. It has to do with, I'm sorry, give me your key words for this one. Avoiding FOMO. It's not what you miss, it's what you make. What are the key words for this one? Keywords. This is an easy one, right? Keywords. Give me 2 keywords. It's not what you miss, it's what you make. What are the keywords? Fearlessness. Okay. Like I said, I'm not judging. I'm just writing down what you guys are saying. And what's another one? Plan. I'll put process too. I like all those. We don't have to limit it to 2. Okay. KPP, that's good, but I think we'll just call that plan. I think we know what that means there. Patience. Next, training tip number 3. Everyone has a pile of woulda, shoulda, couldas. I love that. Anyone can become a good chart reader. It takes a little bit of understanding and a moderate amount of dedication, although it is true that most have problems because they do not learn how to read a chart. Many have discovered that once you do learn, it may not translate. It may not translate. It will not immediately translate to putting money in the bank. Woulda, coulda, shoulda, gravestone. You have to get better than having a great watch list and then not making money from it. I guess this is one of these that I think it's a bigger deal than it sounds like. And this is probably just from my experience in dealing with people a lot. I put a couple of lines here that you don't see. There's a period of time where you have the right stuff on your screen, but you never make money at the end of the month. And you know what? I won't even ask for volunteers. This probably covers a lot of you. This is that in-between stage where you're starting to learn and you have the stuff on the screen. At the end of the day, you say, wow, my bullish watch list, most of them all rallied. My bearish watch list, most of them fell. Wow, wow, wow. But I'm not making any money this week. What's going on? I'm not getting the ones that I'm supposed to. Whatever it is, right? You're taking the wrong one, or you're not getting a good entry, or you're not managing right, whatever it is. I call that the pile of woulda, shoulda, couldas. Oh, gee, I could have played that. I would have played that. I was going to play that. They feel good, but they do not put money in the account. This is the next step of learning. You need to understand better entries and management. Math and yes, psychology. Let me say that again. The next step of learning, you need to better understand entries, management, math, and yes, psychology. Something just popped in my head. I'm going to say off script here, and that is this kind of lines up with my view of the educational classes here at DTS. Right on the homepage, I'm not embarrassed to say it, right on the homepage, if you look down, there's a section called Warning. And part of it goes on to say that, look, there's a whole seminar program, but you can take the classes individually. And some people want to just take that first class because it's cheaper and blah, blah, blah. But I say right on the site, though, very clearly, I think it's difficult to make money with only the knowledge of the first class. I say that right there. And it goes in line with what I just said, is that the next step of learning is to understand entries, management, math, and psychology. And that's really where I think the money making comes in, which is really in kind of the second class of the 3, which talks about how to really perfect entries, perfect how to take a stop, how to manage a stop, and how to get to a target. Because without that, a good watch list doesn't necessarily make you money. Everyone likes to lament about the close calls. That's fine. I do too. I'll in the room sometimes. You guys know. I'll say, "Wow, I mentioned this at 9:30 or 10 o'clock, and I said I wasn't going to do it because I couldn't take another trade right now. And boy, look at that, it was a home run." There was one of those today, right? Roku. There are a couple of them today. That were kind of the next things I was going to do, and I'll mention them to the room sometimes. But just once in a while. But here's the big difference. This is fine to do that unless that is all you have. In other words, at the end of the day, if all you have is the woulda, coulda, shouldas, there's a problem, right? Do you agree with that? Not one day. That can happen to anybody any one day. And this is where a couple of emails I sent over recent time just asked you to be honest and frank with yourself. I'm all in favor of people learning on their own. For those that are learning on their own, I even volunteer to help you. But both for in terms of whether or not you should subscribe to the long-term trader and whether or not you should take seminars, all I ask is this, is that you give an honest assessment. If you've been at it a while and you're making no progress, don't go through the emotional thing, well, I'm sure I'll get better next month. Well, if there's some reason you're going to get better, great, go at it. But if you're just going downhill constantly and there's and the rope has nothing to hang on to anymore, there comes a time where you have to say, I need to either stop what I'm doing or get help or whatever it is. And this is where, if you're in this category of you just have the woulda, coulda, shouldas all the time, you got to get to the next step. This is a nice plateau you're at. It takes good skill, I really mean that, to have a good pile of woulda, coulda, shouldas. It means you have the tools that are to make money, but you're not making money from them, and it's a very common problem at this point. And that brings up one last topic on this. I wrote this. Everyone likes to lament about the close calls. That's fine, unless that's all you have. Have you ever said this, though? Has anyone ever said this? if I wouldn't have moved my stop too soon, that would have been a great trade. Anybody ever said that? You look back, you didn't have to say it out loud, but you look back and you think, oh yeah, gee, that was a good trade. Yeah, I moved my stop too quick, and boy, that would have been a home run if I didn't do that, right? Okay, I'm sure that happens all the time. But here's the question, and this is getting to that, maybe that third level, which people don't get to all that often, is when you moved your stop, was that correct for you to move your stop or not? Ding, ding, ding. Does that really hit home with anybody? So everybody looks back and says, oh, yeah, gee, if I wouldn't have moved my stop, that would have been a home run today. Well, why did you move your stop? Were you following what you're supposed to do? And if this always happens, did you ever think maybe you should change what you do? Or was this just one day where normally your management is fine, and boy, this one just slipped, sometimes things slip through the cracks. It happened to me in ATVI today. I hit a first target, got the stop to where I thought the proper location was on the back half. It took out the trail, made some money on the back half, but then it fell to scorching new lows. But that was okay because it doesn't happen to me all the time. I did what I was supposed to do. But if all the time you're just saying, well, if I wouldn't have moved my stop, well, why are you doing it then? That's the question, is when you see the woulda, coulda, shoulda, the good trader, the one that's going to be successful, digs to the next level and says, well, why, right? How do I fix that? See, that was something I think that I always had. If I had anything going for me way back when, it was that. When I started, guys, there was no education to speak of like this. I took a class that was just one class. There's nothing else. There was the trading room was typing only. I mean, there was not much to learn when I started, and I was just of that nature. Whereas like anything, something happened. I said, well, why did it happen? Is it supposed to happen that way? Can I change it? And that's where everyone has to be. You have to have a structure, know what you're doing, and then once you have that structure, then it becomes fairly easy to say, should I have done that or shouldn't I have done that, right? All right. So trading tip number 3. Any quick one-word comments for trading tip number 3? How come I'm talking faster and I'm falling further behind? Comments for number 3. Work. How did you get that to be blue all of a sudden? How about commit? Does that make sense? Any other words to describe? Any other words to describe? How do you spell commit? How come I can't spell commit? M-M-I-T, right? Didn't I have that originally? There it is. Consistency. How about, nobody said the one that I would have picked one word, and nobody said that word yet. Anybody know what that word is? It's follow-up, right? Follow-up. Trading tip number 4. Oh, trading tip number 3, I had a second line here. I think I read this though, didn't I? There's a period of time when you have the right stuff on the screen, never make money some days. Yeah, I read this already. Okay. So I read this. I just had not advanced the screen for you, so there it is. Catch it on the replay. Well, I'm going to catch up on time here on number 4 because I have nothing to say about number 4 really. This is my favorite trading quote. Many of you know this. It's from Jimmy Rogers, signed James Rogers, but everybody knew him as Jimmy Rogers. He used to. I don't really know all that much about him. I know he rode motorcycles. He wore a bow tie. He used to be on CNBC a lot way back when. But when I first read the book Market Wizards, there was a dedication by Jimmy Rogers in that book, and in there, this was quoted. Well, I'm not even sure it's a dedication by them, but whatever it was, on page 4 of Market Wizards, this was in there. And to me, this was better than the whole book, or this is better than 10 books I read. And this is just something that it just has to hit you the right way. I mean, if you're a certain spot or you're trading, this is a quote to me that really meant a lot. It helped me a lot. It fixed, I guess, little things in the way I was thinking. And I'm just going to read it real quick, and then we're going to move on because I have nothing to add to it. But it's that middle part of it. So I just wait till there's money laying in the corner. Okay, it's kind of cliche. And all I have to do is go over there and pick it up. I do nothing in the meantime. But here it comes. In essence, by not wanting to trade, I have inadvertently transformed myself into a master of patience. By forcing myself to wait until there was a trade that appeared so compelling that I could not stand the thought of not taking it, I had vastly improved the odds. What is this the direct opposite of? The exact, perfect antithesis. What is it exactly the opposite of on a prior slide? Exactly, FOMO. Exactly. Yeah, well, overtrading is FOMO too. It's all the same thing, exactly. Yeah, I was thinking of FOMO. It's exactly the reverse of FOMO. Nothing I can add to that one. We're going to pick up a little time there. So take it for what it's worth. I tell people that come through the seminars, there's 2 slides that they should print out and put on their monitor. This one to remind you of that all the time, and another one that's a slide in the manual. On to number 5. Number 5 is a pretty simple one. It's more of a instruction than it is a big psychological thing. It says, don't go for the home run when you need it, go for it when you don't. And of course, most traders do exactly the opposite, hence DTS quick tip number 5. This is number 5. I think this is very true. Going for the home run is great. Do it for the icing on the cake. Why do you go for the home run as the icing on the cake rather than to pull you out of a deep hole? Well, I think they're very different, Chris. In my mind, they're very different. This is a very specific thing, I think. To me, that last one permeates everything you do. Depends how you look at it. Yeah, right. Well, that's true. Yeah, a little bit. But yeah, this one certainly speaks to desperation, and that's the whole point. Is that a lot of times traders are start getting in trouble, their account's down, and then they go for the big home run. But the problem is, you go for the home run, you get the home run type of loss if you're wrong. But when you're right, guess what? Nobody takes the home run, right? Not if you're desperate for it, right? You make a little bit of money, you say, oh, thank God I got this money, and you're done, right? That's exactly the Babe Ruth analogy, which actually I went through on a presentation long ago. But it's kind of like, Babe Ruth, home run king at the time, he also was the strikeout king. Do you want him on your team? Absolutely. But what if every other time he hit a home run over the fence, he walked to first base and then just went in the dugout? If you do that in Major League Baseball, it's an out. You don't get the home run. But that's what a lot of traders do. In other words, they get the home run trade, and then they just take pennies out of it because they're so afraid. But if you don't need the money, if you don't need the home run, and you're having a good day, you're having a good week, you're having a good month, and you take a trade, it's maybe a little tighter stop or whatever it is, you just walk away and let it go, that's where you're able to just let it go because you don't care, because it's all icing on the cake. It's all free money, so to speak, and you're much more able to manage it properly. And the truth of it is also the other way. Besides the fact you won't manage it right, you're not in any position. If you're down and you're having a hard time, it means you're not trading right. So there's no odds at all that this next trade is going to work for some reason, right? So you get out of a hole, so to speak. You don't get out of a hole by calling it a bulldozer. You get out of a hole by just chipping your way out of it, just very slowly. Well, Jack, that's a good question. I understand why you're saying it, but maybe I didn't communicate it properly. What'll happen is sometimes during the day, in other words, and this gets a little complicated, but when there's a lot of times where I'll have a setup, and I always have multiple choices of how to enter in terms of how much safety I want to have in the stop and how to enter and all that kind of stuff. And sometimes I find very, very cute little entries. In other words, just for a quick example, what if you found a little 1-minute sell setup inside of a 60-minute sell setup, and it just happened to be the correct one, right? Odds are it wouldn't be. But what if you just found that correct one and you played it as a 1-minute sell setup? A 60-minute target off a 1-minute sell setup would be a home run. That's what I mean by that. I don't mean necessarily hanging on to a swing trade just blindly for, when it's not going well. I just mean the way you set up a trade sometimes, I wouldn't normally do it that way. But if it's kind of the icing on the cake one day and you have this nice little setup, I might not do it on a day where I'm just making my goal, because then maybe I get my goal back. But if I'm up 2-3 times my goal and the setup comes, once in a while I'll say, hey, I'm going for the home run on this one. Okay, so that's what I mean by that. It would always be what's in front of me. True, Don. Trading tip number 6. I'm kind of on schedule, guys. I want to get to the last one because that's one I had a lot of questions on. Stock selection is important, but you make money with your entry and management. So this will be an easy one because we kind of discussed this in other ways before too. Yeah, I agree, Jeff. I understand what you're saying. I don't think you understand what I'm saying. Is that there's different ways you can take the setups, though. The way I trade, at least, there's different ways you can handle it. Where you're most of the times I'm taking setups where it's highly unlikely that I would stop out, but I can flip that around sometimes and say, might stop out of this one, but if I don't, it's a home run. Just maybe my language. All right, trading tips. Stock selection is important, but you make money with your entry and management. But here's the line that I don't think a lot of people understand, at least in the way I trade. This is so true to such a point that selection is actually secondary despite the belief of most traders. How many of you agree with me that stock selection can actually become secondary to entry and management? You don't have to. I mean, you may not at all. I very much believe that. Yeah. Because I mean, this would fly in the face of a newer trader's way of thinking, right? It's all about picking the right stock, and you got to get the right stock. Not really it. I mean, there are when you get down to, let's say your top handful of great setups that week for long term or that day for day trading, it gets very difficult in my mind to tell, whether your first favorite or your fourth favorite is going to be the home run that day or the good trade. You just can't tell at some point because trading's about odds. There's no guarantees. So to me, it becomes much more a matter of a good, reasonable setup and then the entry and management that makes you the money. So this is one of these, I'm going to leave it like this. What I'm saying there is 100% correct. If you don't agree with me, you will someday. Yeah, well, that's true then, Mike, yeah. And that's the only thing I don't like about trading the futures is you have one setup. It's the only thing that, I don't have the patience for that. All right. So I'm going to move on because I think we talked about the rest of that ad nauseum because this last one here is a little bit tricky too. Tip number 7. It's okay to be wrong and lose money, even more than you like. Some people are going to cringe at that. When you have strong conviction and following your plan on a high odds trades. Sometimes you are wrong and you cannot be afraid of that. This is a really big one to me, guys. If you're struggling, again, the first step is you have to know what you're doing. You can't just have losing trades in front of you and expect to make money. But if you're in a category where you kind of have more winning trades than losing trades, at least after the fact, this could be part of it. It's a sin to lose more than a minimal amount when you are clueless. You can't, you're going to be wrong sometimes, right? And if you're always hedging your bets, so to speak, you're never going to have any real winners. You're always going to be just confident. And that's where so many traders end up with the pile of, small winners, small losers, small winners, small losers, break even, made a little, lost a little. Some of you know what I'm talking about, right? It's been going on forever, just the pile of break even trades. And this could be a big part of it. You cannot be afraid of being wrong if you know what you're doing and you're doing everything right, because sometimes you're wrong. You have to have conviction. You have to say, I'm doing this trade. I'm going to give it the room. I'm going to do what I need to. And son of a gun, it didn't work. Darn it, stopped out. But that's what you have to do sometimes. Because to not do that, you can't ever win. Does that make any sense? And the other side of that is just as important. Right? And the other side of that just as important. It's a sin to go out there and lose anything more than, I don't have a problem with anybody trying a trade and losing it, but it's a sin to go out there and lose, more than a minimal amount of money when you don't have a clue what you're doing, right? I said that today, right, guys? Today, this morning, I had a good day today, but, I didn't want to do anything else at a certain point because I just saw stocks all over the place this morning. I mean, things all fell this afternoon, but this morning things are just kind of all over the place, and they kind of started to make sense, but I just felt a little lost. Yeah, I didn't feel like I was in control. When I look at my screen and I kind of have a bunch of thumbnails and, the bullish in a certain spot, bearish in a certain spot. And when all my bullish thumbnails are going up and all my bearish thumbnails are going down, I feel like I'm in control. I know what's going on. And some days it's like they're just all over the place. I'm like, okay, I have no clue what's going on here today. And that happens because sector rotation, all of a sudden the stuff that's weak gets bought. I had a day, Monday. It was Monday, right? Where we had the big sector rotation, right? Financials, oil, and the COVID stocks, right? They all kind of broke out like crazy. They were all weak before that. They were all kind of rolling over, heading down, and all of a sudden they all blasted off to the upside. Big. So that happens sometimes. The money switches. You have to adjust that. You have to see it. But sometimes the day it happens, things are a little squirrely. Sometimes things have been dropping. All of a sudden, the money goes to them because they reach some level, and boom, that's how a chart gets made. You didn't know they're going to bounce. You didn't know they're going to stop falling. They just did one day. So when you look around and you're not recognizing what's going on, don't lose any significant money, right? But when you know what's going on and things are falling in place, hit the button with conviction. If you're wrong sometimes, you're wrong. That's what a stop out is, but trade to make money. Any questions? Are there on this one here? Do we have more words to go with this one? Well, conviction is the word for this one, right? I'll come up with that one. Any others? So there's a bunch of words we created. Rules, discipline, fearless, plan, process, patience, work, commit, consistency, follow-up, conviction. There you go. Take a picture of that if you like those words. Any other words you want to add to this? At the beginning, I talked about the fact that knowing the charts is good, but the first problem is most people don't really know them well enough. And then even if you do know them well enough, there's what I call this three-legged stool. There's an entire presentation on the three-legged stool. It's actually in the Hall of Fame section on the DTS Free Stuff page. If you go there, there's a section called Hall of Fame, which voted on by DTS members recently as the 4 most popular videos from prior events. That'll take you right to the Hall of Fame section there. Naturally, since I preached that this is important to understand all 3 legs of the stool, that's all part of what is taught at DTS, obviously. To be a successful trader, you have to get your hands wrapped around everything. The first part of that is great technical understanding. And for those of you who are ready, this Friday will be the intro class coming up that everyone will be invited to. It's free. It is also the first part of the next cycle of the DTS seminar program, January 7th. And then after that is the DTS seminar program starting on that Saturday. Any questions, anybody? Any questions? For those of you hunting around, you know where the free stuff page is, I assume. Thanks, Louis. I'm glad you enjoyed. I kind of like this one also, and we'll be having another in a couple of weeks. It is 5:57. Do we have any questions? All right, that should do it then. We'll see you all on Friday. You'll get your invites. Have a great evening, everybody, and have a great 2022. Everybody make money, all time frames, all the time, all right? If you're not, get a hold of me.